go to Kevin Grain and Caroline Woods. We've got some earnings this afternoon with TOST and Carvana. But KG, we had a little breaking news there on Palantir. Let's come back to that for just 1 sec. I want to get your guys' take on that because, 10% is a big move for Palantir. I mean, I guess if the market assumes you're going to get all the new government contracts from this administration, but then they say they're going to start cutting contracts, how does that shake out, KG?
Yeah, I'm not sure how much of an impact that's going to have on Palantir. It does appear that obviously the Trump administration wants to cut around a lot of fat when it comes to the government, but also leveraging technology. That's really what Elon's been advocating for, and Palantir is that platform in order to do so. There may be some antiquated systems within the Pentagon or the DoD itself that Palantir can be a direct beneficiary of as far as trying to fix that. And then also the commercial side of their business has really been holding up pretty well. And actually, the growth rates are doing pretty good. We know that the government contracts, they could be cyclical or have starts and stops, but the commercial side, I think, is really the bread and butter for this company. So unfortunate that you did see that slide to the downside here, but I'm not sure how much of an impact it's going to have. I do want to say, did you see Supermicro, that drop that it just had too? Supermicro dropped 16% intraday. I mean, it's still up. It closed up 8%, but on an intraday basis, it dropped 16% on that news as well. I found that to be very interesting.
Wow. Well, that's funny because the conversation I was having with Jenny about SMCI was that if you were pricing it the way they have for the last week, with less than a week until their deadline, you're basically saying 100%. If you're buying Supermicro stock, like at any degree right now, you're saying effectively you're making a binary bet that 100% they're going to deliver on that timeline. So I would imagine there are some people interested in taking the other side of that because it's getting cheaper and cheaper and cheaper by the minute. All right, that's an interesting observation there. Caroline, what do you think? Palantir, SMCI, should we get wrapped up in the stock-specific stories?
I think also perspective is key, especially, with both of them and the huge moves that we've seen. So yes, Palantir did shed 10% today, but it's still up 35% in February alone, 50% so far in 2025, 360% over the past 1 year. So obviously that's just a Washington Post report right now that, I was looking for more details, but it just basically says that President Trump is ordering the Pentagon and the U.S. military to develop plans for 8% cuts to the defense budget in each of the next 5 years. So pretty sweeping budget cuts, 8%. We'll see how that impacts Palantir. Obviously, there's some shaky ground for Palantir given how far it's already run and given its, obviously dependence on government contracts. But, we'll have to see how it plays out. But I do think that it's important to know just how 10% is just a drop in the bucket compared to how much it's already run. And Supermicro, every time I see it move higher, I think of that 25th deadline. And they said that they're on track to deliver on the 25th. So they're not even trying to hit it before, so it should be interesting. The calendar is marked.
This has got to be one of the most wild things that's ever happened in the stock market. Just that right there. Just like not even saying that they're going to try and get it before, I guess they want to keep the hopes low, but boy, yeah, it is a fascinating thing. I'm trying to think of what the casino analog for that is. I'll think about it for a second, but I mean, it's basically, like I said, it's basically you're putting, all your money on it hitting one way because there's no other acceptable outcome. They either get it through or they don't. And if they don't, then bye-bye. So it's it's a fun one. This afternoon, we got Carvana. It's pretty fun too, KG. Again, we talked to Fed with Lizanne and Kathy. There's nothing going on with the Fed minutes. So let's keep talking some of the fun stuff. Carvana's the most fun one this afternoon for sure. But TOST is out as well, and that's already hidden. So maybe we should hit that because I think the stock is pretty well underappreciated still, considering how much I see it all over the place, Caroline. It's like you can't purchase something point of sale anymore without it being TOST. I don't know what the rate is, but their penetration's definitely going way up.
Yeah, and I was just looking to see how many, 28,000, they added or I guess in 2024 they added 28,000 net locations. I was feeling the same way. I feel like I'm constantly utilizing TOST here, just in terms of obviously the expectations, the bar a little bit lower for a name like TOST, given the fact that it hasn't had quite as impressive as of a run up as Carvana. But TOST shares, it looks like they're reversing the losses that we saw, about 4.5% losses heading into the close, and I'm seeing a nice pop on these results just as I'm kind of going through them here. It looks like in terms of for the fourth quarter, annual recurring revenue as of the December 31st, 1.6 billion, up 34% year over year. So that was in line basically with what they were expecting. I can't seem to find that. I'm looking here. I can't seem to find the trailing numbers quite yet, but I do see first quarter outlook, non-GAAP subscription services, financial technology solutions, gross profit in the range of 385 to 395. So that'd be 27 to 30% growth. So continuing with those impressive growth rates compared to the first quarter. Adjusted EBITDA in the range of 100 million to 110 million.
Yes, I see that. So she was looking for 99 million. So that's a good outlook, more than a 10% beat for their first quarter forecast. That's good.
So yeah, so outlook good, and trailing numbers, as you said, beat expectations, and it looks like this is a stock that's going to be rewarded based on this, based on these numbers here.
Seems like it should be. Profitability beating expectations and growing alongside revenues and locations. That seems like a recipe for success, Kevin.
Yeah, I agree with you. I mean, these are impressive numbers when you're looking at the year-over-year comps. I think the biggest question is how long is this going to last? Is this actually a very low bar for them, or is this kind of the peak growth? I'm not saying peak growth, but are the comps going to get very difficult when we're looking at this company this time next year, right? You're talking about gross payment volume up over 25% year over year, total locations increasing 26%. It's phenomenal work here. And like Caroline was talking about, you did see a little bit of a bid. Now we're seeing it slide a little bit. I'm not sure what the guidance is and what the range is. Ollie, maybe you have that. But on the surface, it actually looks like a pretty decent quarter.
Yeah, turning south here a bit, but even if they do peak out for growth at like 27%, it's pretty impressive stuff that they're able to still find that market in one that is admittedly always changing, the way we pay and the way we're doing transactions. It still feels like there's a lot of like settling in of new technologies that are very much at play here. I mean, we were talking about crypto earlier with Fold and the way people are paying with coins. So there's still a lot of things, it seems, under the sun that are keeping the growth rate going there. But I don't want to butter the stock up too much, Caroline.
Well, you know what, and this is one that I was talking about this one a little bit earlier, and that analysts are kind of mixed on actually heading into. There wasn't a whole lot of bullishness. I should say, I guess it was pretty balanced heading into it. 14 buys, 15 holds, only one sell, and they were actually trading in line with the median price target of $40 a share. So I was curious to see what the reaction would look like. Obviously, as we've learned with Palantir, for example, the analyst community isn't always right with some of these names, but when they're so mixed, I'm always curious about what we're actually going to see in terms of reaction. And similar story, honestly, for Carvana as well, just from the analyst community. Obviously, that's had a much bigger run up, but very much mixed between buys and holds there. So we'll have to see on that one as well.
Yeah, good point. A lot of doubters on the stock still, for sure. With more saying to hold or sell than to buy it. What do you think, KG? Enough growth, or you think this market will eventually kind of get settled in? Because I imagine at a certain point, like, you've got to have a really, really compelling reason as a vendor to change your technology. And obviously Square does a good job, Block and others.
You would be actually very surprised when you're looking at this space. Yeah, there's actually a lot of churn when it comes to leveraging these vendors. That's actually one of the issues that Square actually had. They had commanded the small business space, but they lost a little bit of market share. Yeah, and then also you have larger financial institutions trying to capture some of that market share as well. So you would think that, once you have a player or a partner, you're pretty sticky, but actually it's very competitive when it comes to commission rates or take rates, if you will, in order to process transactions. So I used to be a small business banker, and we would see churn in businesses every year, just depending on the deals that were out there. Yeah,
all the new tech, people are trying to stay ahead of the curve, and sounds like everybody's willing to undercut each other on fees to be able to get locked in. Let's talk some Carvana. Speaking of undercutting, no, I'm just kidding. Carvana shares have been doing amazing, obviously. The chop in the aftermarket here seems to be fairly muted by Carvana standards. Just keep in mind there was like a 13 percentage point expected move in the options implied. Revenues 3.55 billion versus the estimate of 3.34, so pretty good beat there. Adjusted EBITDA also looks ahead of the estimates, 359 million versus 328 million. Margins seem good, 10% versus 9.8. If there's something alarming here, it's not showing up in the main numbers, I don't think, Kevin.
No, it's not. I mean, obviously, there's been a couple of accusations about how they're actually reporting their numbers, but obviously, it doesn't seem like there has been anything that has come from that, and it looks like the street has discounted it. So, really good comeback story. Obviously, we know that they restructured their debt, so it's a little bit different when it comes to their business lines right now and how they're actually able to stay profitable. And if they're able to kind of maintain where they're at right now, cult following, as we kind of talked about with some other stocks, and no one really wants to short this anymore. So right now the trajectory is to the upside, and a reaction like this for the numbers, I think, is actually pretty good for them because they're trading at pretty high multiples right now.
There are some stubborn shorts left in there, 9% afloat right now. So there are some haters lingering, Caroline, but so far this stock has been using them as fuel.
Yeah, and the market has largely dismissed that scathing short report from Hindenburg, and obviously Hindenburg closed up shop too, so that likely helped. I think that in terms of the units sold in the fourth quarter, that was expected to come in a little more than 109,000. It was like 109,210, and they actually sold 114,379 units, so that's up 50% year over year. And then for the Q4 revenue, as you said, about 3.55 billion, so up 46% year over year. So that came in far better than what analysts were looking for. In terms of the outlook, it says that their 2024 results position the company well for a strong 2025. Looking forward, Carvana expects significant growth in both retail units sold and adjusted EBITDA in full year 2025, including a sequential increase in both retail units sold, so basically above 114,379, and adjusted EBITDA in Q1 2025, assuming the environment remains stable. So from what I can see, it all seems like very positive commentary, talking about milestones and records, and in terms of net income margins, and in terms of record top and bottom line results, according to the press release. So this will be an interesting one, just given how far it's run. It looks like initially we're seeing this sell-off, but let's see if the conference call can kind of turn shares around. Keep in mind, they are up. They were up about 14% in February alone, up more than 38% so far in 2025.
Up more than 440% over the last 52 weeks. Hold on, let me get one more in there. Up 2,700%. in the last 2 years. Incredible. Can you believe it, Kevin?
No, I mean, this is a rarity when you see a turnaround story like this. But once again, I mean, they I don't want to say they got bailed out, but they did. Debt restructuring in the manner that they were able to do so, it made a huge difference when it came to their business. And so there's also a lot of investors there. I'm not sure as far as the guidance, if this is normal, how they provided their outlook, but it means absolutely nothing to me. There's no hardcore numbers or anything like that. They're just basically saying we're expecting some pretty decent growth if everything kind of remains the where it's at right now. So
okay,
I found that very odd for an outlook.
Got it.
Also used to be a Carvana driver in addition to a small business banker. Is there anything you can't do, Kevin?
Not working at Carvana, I can tell you that.
Yeah. How about those loans? Got any insight into those over there? Know anybody? Give me one of them. All right. Thanks, Kevin Green, Caroline Woods. A fun chat on some specific stocks there. Appreciate that, guys.